Alright guys, so this is how I do my top-down analysis or my multi-time frame analysis. Now, whenever I'm looking at the monthly, weekly, and the daily time frame, what I'm just trying to point out from there is actually the general market trend. I want to understand where the market is directed at. I want to know whether it is pushing up or it is pushing down. Now, this is a clean chart. We're looking at gold because I'm going to use gold to give this example. We are looking at gold. This is a clean chart. And when you're looking at it, you will know that gold is pointing to the upside. It is bullish, but we are going to do our top-down analysis together, map out structure so that you actually understand what is going on clearly by just looking at the charts. So if you view gold from the monthly time frame, you will see that it is pointed to the upside, we're bullish. If you view from the weekly time frame, you also see that it is pointing to the upside, we are bullish. Same thing is applicable with the daily time frame. You will see that it is pointing to the upside and it's bullish. Now, from the daily time frame, this is where I love, reading my market structure, mapping out all the breakup structures, and pointing out some of the origins that price has not mitigated and the rest. So if you view from here, we're going to start doing our top-down analysis from this level. We're going to analyze the movement from here up until we get to this level. So if we check, this was actually the last breakup structure to the downside. This is the last breakup structure to the downside, and from there we got this change of character. We got this change of character to the upside, and from there price started breaking structure to the upside. So whenever you are seeing this type of momentum, when price is breaking structure to the upside, just know that we are bullish. Whenever price is breaking structure to the upside, giving higher highs and higher lows, just know that we are bullish. So I'm trying to point out some of the breakup structures we have intact, and then with that, we'll get to know the next line of action to take. So from the daily time frame, what I've mapped out now, it has shown me that, okay, gold is bullish from what I've seen, creating higher highs and higher lows. So this is actually the last breakup structure. What am I going to do then? So pointing this out as a last breakup structure, you really understand our strategy. Once there is a breakup structure, look out for the origin that caused the breakup structure. So pointing this out as the last breakup structure to the upside, looking at the daily time frame, the demand zone here that caused this breakup structure, we should be looking at this particular level. Now, with what I've seen from the daily time frame, I've been able to point out the general trend. Now, if I go down to 4 hours time frame, 4 hours time frame, this is now where I get to, start doing my main analysis, refining my order blocks, my demand zones or my supply zones, pointing out where to actually, focus on and start taking trades from. So from the 4 hours time frame, now you can see we mapped out this demand zone from the daily time frame. So what I do here in 4 hours is to actually refine it to know where to actually wait for it, because if you map it out from the daily time frame, the demand zone can be a little bit massive. So from 4 hours and 2 hours, I'll get to refine the demand zone, know if there are things I didn't actually map out, because if you check from the higher time frame, the chart is well summarized from the higher time frame, but looking at 4 hours and 2 hours, you get to see more candlesticks and other things you can take note of. So these demands, so you can see I am currently refining it. We are looking at the 2 hours now. I'm currently refining it to the 2 hours demand zone. So this is where I'll be waiting for it. So all I'm just going to do now, let me quickly play the charts to wait for price to tap in there. Because, okay, now, as I've mapped out this particular origin now from the higher time frame, and price has mitigated it. So remember, we got this breakup structure to the upside. Let me take away this line. We got this breakup structure to the upside from the daily time frame. Let me show you guys again. So from the daily time frame, you can see we got this breakup structure, and you can see when we mapped out this origin from daily time frame, we started from here, but now we've refined it. So what I use my 4 hours and 2 hour time frame to do is to refine any origin that is coming from the higher time frame. I refine it all the way down to my entry time frame. So having it here now from 2 hours, now this is refined to 2 hours for the block. So seeing that price has tapped into this level, what else do I need to do? And I've seen that 4 hours and 2 hours are aligning with what I've seen for the higher time frame. What else do I need to do? The next thing I need to do is to head straight to my entry time frame. Now, I'm a day trader, so as a day trader, your entry time frame can be 1 hour, 45 minutes, 30 minutes, 15 minutes. But preferably, I love taking my trades from 15 minutes. So, as I've seen that price has tapped into my own, but if you are a swinger or position trader, or you love taking your trades from 2 hours, this is the right place to start taking a buy from now. You can start taking a buy from this particular level if price has tapped into your zone. But for me, as price has tapped into this level, all I just need to do is, view from my entry time frame. We are looking at 1 hour, it's still aligning with what we've seen from the hour time frame. 45 minutes, still aligning with what we've seen from the hour time frame. That's how I'm viewing it until I get to my entry time frame, which is 15 minutes. Now, viewing this from 15 minutes, what can I see? Guys, remember your confirmation entry, because this particular point of interest is from the higher time frame. So I will not just take an instant execution here, but I'm going to wait for more confirmations before I take this particular trade. So what is the confirmation I need here now? So viewing this, you can see how price was actually breaking structure to the downside as it was tapping into this particular origin. You can see how price is breaking structure to the upside, this level too. Sorry, breaking structure to the downside. You can see from here, price breaking structure to the downside, breaking structure to the downside. So what do I need to wait for? I need to wait for price to at least clear out this level for me, because this particular level is actually the last origin that caused the breaking structure to the downside. I need to wait for price to clear out this particular origin for me to the upside, and then, because once price clears it, I was going to turn to a change of character for me. So that's what I'm waiting for. Once that change of character happens, then I can start looking for how to buy gold. So let's view. You can see from there, price is still breaking structure to the downside. We're still getting another break of structure to the downside. Now, as price is breaking structure to the downside, I am bringing down this my change of character line, because we have another origin that caused the change of character. So this will be where I'll be waiting for price to clear to the upside and give me a change of character, because we're still dancing inside this higher time frame origin. So let's see what the market will do there. Now you can see what we have. We now have a clean change of character around this level. So now I am getting ready to buy gold, Now, from the way I take my entries, it's either I wait for price to get back into this particular order block that caused this change of character, or I will wait for price to get into this FVG here that also caused this particular change of character, FVG that is imbalance. I'll wait for price to get into this particular level. So preferably, since we're looking at gold and how gold respects FVG, I'll be looking to take trades from this particular FVG. But if it decides to extend into this other block, I'll still take entries from there. But since it's gold, this FVG will be the first thing I'll be looking out for to see how price will react from there. So that will be the first level that I'll place my trade. Let me reduce a little risk, because I love taking my entries more from other blocks. But since it's good, I'm just going to take my entries from FVG and reduce a little risk, because I'm not going to go in fully, but I'll just take my entry so that it will not leave me and go. Because following my backtesting, gold respects FVG well. So let's see what will happen. From there, we've tapped in and okay, wow. So you can see how to take our confirmation entry. So we've done our top-down analysis, and why are we actually buying? We are buying because we've seen from the higher time frame that we are pushing to the upside. That's the essence of multi-time frame analysis. And I've used other time frames like 2 hours, 4 hours to refine my origin all the way down to my entry time frame, which is 15 minutes. And from 15 minutes, what I've just done is to wait for confirmation. This is a confirmation entry using FVG now as our entry because price did not tap into the OB here. Instead, we entered to the FVG. And now we are pushing to the upside. So we can see how clean this trade is. You can see how clean this trade is. Full TP. This is a trade of, I was just risking 62 pips to catch up to 257 pips. So this is just how clean you can keep it, understanding what is going on in the charts. Now, you don't just have to open the chart and you start trading immediately. You need to go down to the higher time frame, know the general trend, do your analysis from there, then come down to your entry time frame, that is the lower time frame, to set your traps and start taking your trades, because that is what I did here now. Now, if we want to keep taking our entries, because this one just smashed full TP, I actually took TP here because of this level here, that is this other block here, because I just know that whenever price gets into another block, it can react. So this is more like a supply zone, so that's why I decided to take this first TP here. Now, if I'm looking to take another trade, we have a breakout structure here. This is a breakout structure, so I'm just going to take this out so that it will not block this. So we have a breakout structure here. So if we're looking to take trades, this is another level, but we're going to treat this as mainly a demand zone. It's going to be a demand zone. Now, following our strategy, everything is intact apart from imbalance. Imbalance is not here. So whenever all my contracts are not intact, that is not an A+ setup for me. So even if I want to take it, I'll still reduce risk. Let's say if I'm risking 1% of my accounts, I can decide to risk half of that 1% here because it's not an A+ setup for me. But whenever all my conferences are intact, what I mean by that is I've gotten a breakout structure, there's liquidity price restricted up into my zone, and then there is imbalance. It's an A+ setup for me and I am going all in. But now getting this breakout structure, if price should get back into this level, I'm still expecting it to push up because we are still reacting off this demand zone here. So I'm still expecting a push up. So I can just, since it's an origin from my entry time frame, it will be an instant execution. So remember, this is gold. So let's wait to see where the market will start retracing from, because that is where I'll place my take profit, because I don't like putting an unrealistic take profit. So wherever the market retraces from, that is where I will put my take profit. So this trade is just going to be, we're going to risk 71 pips to catch 274. So let's see if market will get down into that level. Let's see. Okay. I think it has tapped in. Yeah, this is it. So price has tapped in into that level. It's an instant execution, so entry executed. But this spike would have put us in a massive drawdown, but our SL is still intact. We're not stopped out. So now we're pushing. Let's see if this trade is going to give us profit. Okay. I guess we're in profit then. Most traders would have closed from here seeing this particular retracement. So here now, personally, if I want to manage this trade, break even would have been around this level. If I want to manage this trade, break even would have been around this level, because inside the movement we got breakout structure here to the upside. So entering from here, getting this breakout structure, break even will be below. But now we've gotten a new breakout structure here to the upside. So break even will just be around this level. So that means this retracement would have stopped me out on this trade, but I would have taken reasonable profit. But let's see if this trade actually, oh God, it actually went straight to TP. But I'm very sure that if I'm managing this trade, this level would have stopped me out, because if I'm trying to manage this trade, my break even would have been around this level following this breakout structure. So I'll be expecting price to come back, tap in to keep pushing up. So this retracement would have stopped now. But you can see the trade went straight to TP. So for someone that doesn't work with break even, this trade will give you a massive profit, because that's how you'll just be taking your trades following the trend. Now, we'll still continue to catch more buys, because if you go down to the daily time frame, okay, if you check from here now, from daily time frame, you can see where we started taking this buy from. So looking at it, this is also why it's important you should be looking at your multi time frames. So looking at it, you can see where this particular candlestick is targeting. So if the price should push up and get to this level, you should be very careful with it, because there's possibility that it will retrace or it will break. So from here, you should be taking your profit. So don't just be trading blindly from the lower time frame. As you're trading and catching your pips from the lower time frame, also be observant to know what is happening in the higher time frame. So guys, this is just how simple I keep it whenever I am taking my trades, and this is just how simple I do my multi-time frame analysis. So guys, don't forget to subscribe, don't forget to like, and don't forget to turn on the notification bell to always be the first to be notified whenever